CP24 Money.
We now go live to the TMX Broadcast Center to Darren Farwell, Senior Wealth Advisor with Farwell Wealth Management at Scotia McLeod. Hi, Darren.
Hello.
Now, while the Canadian market is down today, it seems as though that's the third day in a row. What's happening?
Yeah, well, as we've been hearing today through the day, it's an important day because this is exactly to the day a 2-year anniversary from the market lows we hit in Canada and United States in March of 2009. Wasn't much of a party day in Toronto, though, because the market was down 150 points. That's 395 points over the last 3 days. But you got to keep in mind, the market is actually up 4.25% in Toronto year to date. There's no way we're going to be able to keep going at that pace. So it's kind of like when you're running a race and you get started a little bit too quickly and you have to take a pause before you get going again. This pullback in the market is like a little pause that refreshes until ultimately the market goes back to those June 2008 highs.
Well, meantime, though, the Canadian dollar keeps going higher. Why is that?
Yeah, Canadian dollar is definitely higher. In fact, Canadian dollar, when I left my desk, was trading at $1.325. That's very strong encouragement for the Canadian economy. I mean, I was here last week saying how the Canadian dollar was at a 3-year high. Now I'm here again this week saying the Canadian dollar is even higher. Despite the pullback in commodity prices we've had, the global investors really like the Canadian economy. As a result of that, we've seen some of the Canadian banks raise their estimates for the Canadian dollar from $1.04, $1.05 to now $1.08. So all that's Canada is glittering these days.
And you mentioned that pullback. What should the average investor be doing right now?
Yeah, there's been a lot of disruption in the world and people are worried. But as we were talking about earlier, we're 2 years now into the recovery. If history is any sort of evidence, and I'd argue that it most certainly is, we've got another 2 years to go. So investors should do what they always do. Buy good quality companies with great business franchises, low debt and good dividend, and the long-term trend is always your friend if you buy good companies.
All right, some excellent advice there, Darren. Thank you very much for this.
Thank you.
It's now 3:54 and 1. This is Toronto's Breaking News, CP24. Are you bored or irritated with your partner?